5 stocks I bought this week. What is happening, investors? It is your boy Jack. I am not a financial advisor and I got the clothing line to prove it. And today we're just going to speak about everything I bought this week. This was a crazy week. I mean, it was up, it was down, it's been insane. Thankfully, my portfolio is in a good position. I am up, I'm at all-time highs despite everything that's gone on in the broader market, so it's been happy days. But I did end up making a few decent-sized purchases this week, and usually on a Friday we speak about that, so that's what we're going to do today. These are all companies I already own, so I am just adding to my positions. There are a few companies I'm watching very, very closely. I'm heavily contemplating getting involved in, but of course I will let you guys know if I do. So right before we get into the video, can I please ask you to hit that juicy like button, as it really helps me out. I would appreciate you so much. If you're new around here, what are you waiting for, my friend? Hit that juicy red subscribe button and join the family, and drop me a comment down below. Let me know if you picked up anything this week or else what you're looking at for next week. I'm always interested in chatting with you guys in the comment section. With that being said, guys, won't waste any time. First company of today. So I'm starting off with these bad boys, and my biggest purchase of this week. I went ahead and picked up 40 more shares in Diamond Peak Holdings, who will be doing the reverse merger with Lordstown Motors. I picked up these shares at $17.94 a share, so even since buying them we're up pretty much 20%, especially when we look in the pre-market and see we're up 6.64%. Now of course anything can happen. Fridays we've seen a lot lately. We start off in the green and gradually there's a sort of sell-off, so I'm not too worried about what actually happens today. But yeah, 40 more shares. I bought these guys in the 12s, 14s, 15s, now in the high 17s. All in all, I have a cost basis of $15 a share and 160 shares total. I really do want to get this up above 200 very soon. So I mean, if there is any sort of a considerable pullback or dip at some stage, I will be loading up yet again. But I mean, guys, on the monthly chart, we are up 70%. You may remember this is a SPAC who didn't really do much for a while. I mean, they were trading here between $12 and $14 for pretty much the entirety of August. It really is only the last few weeks we've started to make real moves to the upside. Now, I did make a full video on these guys earlier on in the week explaining why I personally believe these are the most undervalued electric vehicle stock out there right now. So if you want loads of juicy information, check that video out after this one. Do I still think they're a buy now at $21.10 a share? 100% yes. I still think that in the long term they are incredibly undervalued. If we go on to Lordstown Motors Twitter page, this is one of the really big things that came out September 8th, which is the day I bought more shares. The Lordstown Endurance has reached over $2 billion in pre-order revenue. Only 5 weeks ago, August 3rd, their investor presentation came out and they had $1.4 billion in pre-order revenue. It's literally gone up close to 50% in 5 weeks, people. That equates to about 40,000 pre-orders. Now I know that not every one of them is going to go through, etc, etc, but you cannot argue that that sort of pre-order growth is not a very, and I mean very, attractive sign to investors. The other thing is they are merging by the end of this year. It would not surprise me if it's October. People are finally starting to get excited about these guys, and what I also explained in my video about them was a lot of people are going to make a lot of money in Hyliion, in Workhorse, even in Tesla, and a lot of people will run away with those profits and put them back into the next big guys, who in my opinion are definitely Diamond Peak. These guys were also extremely resilient. The Nasdaq is down 9% from the 2nd of September to the 10th. Disgustingly bad. Lordstown is up over 17, people. Again, the monthly chart, we're up over 70%. Look at the pre-market, we're up nearly 8%. Again, anything could happen. The Nasdaq's down 4.26%. I love these guys. As I said, I want at least 200 shares. It would not surprise me if I get up to 250, 300 plus if we see a considerable dip. This is now my second biggest position, right behind Workhorse. I love them. Okay, an interesting one, and one that I thought long and hard about. I just picked up one more share in Tesla, and I bought that share at $347. Now in my Discord channel, we've been speaking about Tesla quite a lot lately, and I said that I'd be willing to buy between $300 and $350 a share. If we get to the low 300s or even into the 200s, that's when I would be willing to buy quite a lot of Tesla. But when I saw this massive sell-off happen, I mean a 33+% sell-off in Tesla, and I understand that Battery Day, which is in general an absolutely major catalyst for this company, is only a matter of a couple of weeks, not even a couple of weeks away. I said I'd just pick up one more share. Tesla, to me, more than any other company, is a buy and forget about it stock. I don't plan on selling these guys. I don't plan on taking profits at any stage. I plan on holding these guys for at least 5 years. And it is my understanding that in those 5 years, a lot could happen. I completely understand the fact that there is a heavy possibility, and I mean a heavy possibility, we could dip into the 300s. As I said, we could dip into the 200s. But I think there's an even better possibility that if you hold them for 5 years, you're going to make a lot of money. So it doesn't stress me out at all when I see a dip like this, when I see a 30+% dip. I'm still not willing to add very heavy. As I said, it was only one more share. It was nothing crazy. But if we are to fall into the 200s, that's when I would start heavily loading up. Do I think it's very likely? Honestly, no, not in the short term. I think a lot of the dip that we have already saw is all that we will see, especially with the battery day being so close. Who knows, the market movers might try to push it down lower one more time before the battery day, but we'll just have to wait and see. But honestly, guys, this one, if you're not able for it, it's going to stress you out. If you don't have the strong hands, if you cannot handle the volatility, it's going to stress you out, simply put. If you're confident in them and if you know that you will be able to hold them despite whatever happens in the short term, I think it's a fantastic company. But I mean, I don't want to sit here and talk about them all day long, so on to the third company of today. I mean, I had to buy a bit of Workhorse, people. It's my baby. Now, what I will say is I only bought 20 shares, and I bought them at $22.54 a share. Now, I already had 200 shares, so you know, it's not the biggest addition in the world by any means. A lot of people are asking me, am I not afraid to hurt my cost basis? I mean, I bought these guys, I believe, at the low 15s, maybe it was even the high 14s, and now I'm all the way up to a $17.32 cost basis, which is actually quite high. Guys, at the end of the day, I'm buying these guys because I think that they're going to go up in value absolutely immensely in the short term. And I think they're going to go up absolutely disgustingly, insanely immensely in the long term. Would I rather have 50 shares at a $15 cost basis or 220 shares at a $17.50 cost basis? I'd rather the 220 shares. I mean, yeah, it's nice to have a low cost basis and, you know, to see 150% like I'm seeing with Hyliion right now, but I'd rather just have more money in the company and ultimately get more of a return. It doesn't matter, right, if when we hit $30 a share, I don't get to see plus 100% because I will actually have made more money. Cost basis is cool and all, but it's not the most important thing in the world, and this is something I've been saying lately. I mean, I've spoke to lots of really successful investors, people who've been in the markets for decades, and everybody has told me that they've missed out from not investing more because, you know, they were worried about hurting their cost basis. They never complained about, you know, investing more in a company, hurting their cost basis and ultimately making more money. So that's a mindset that I am trying to adapt. I'm trying not to worry too much about hurting cost basis. Now that doesn't mean it's always a good idea to just buy a company when it is really high. But I mean, with Workhorse, we briefly touched $24.49. That was the absolute peak. Then we proceeded to sell off a bit, down 7.5%. But ultimately, on the monthly chart, right now we're up 46%. Again, we're up a little bit pre-market. Fridays, historically, aside from last Friday, haven't been good for Workhorse, so we'll just have to see what happens. Pre-markets are up pretty much all around the board. Whatever happens, happens. I don't really care. Again, I would actually be very happy and I would welcome, and I mean, with the most open arms in the world, I would welcome a considerable dip here. Because although I do have 220 shares, which to me is a very big position, I want more, baby. On Fridays, I always put up a Workhorse video, so I do have a full video on these guys that I just put up a few hours ago if you're seeing this video when it goes up. But essentially, these guys, they're just, they're in an amazing position. The USPS contract is only around the corner. I'm still of the opinion it's going to be announced this month, September. We recently announced that strategic partnership with Hitachi. I mean, that's amazing. In every single way. We still have Duke Energy, we're working on refrigeration. From me speaking with the CFO, we already know that we're speaking with pretty much every single retailer in the US. We have refrigeration routes, our drones are getting closer and closer to being commercially viable with every month that passes. So many catalysts, everybody knows I love these guys. But anyway, that was Workhorse, only 20 shares, but still an addition. Okay, so now we have NIO. Now it was a small addition, it was 20 shares at about $17.50 a share, and I only have a total of 80 shares in the company. So I have about €1,200 in NIO, and to put that into perspective in regards to my other EV plays, I have €2,800 in Lordstown Motors, I have about €1,870 in Tesla, I have about €1,700 in Hyliion, and I have €4,150 in Workhorse. So even after this addition, it still is by far my smallest position in EV, and I want to make that quite clear. I do like NIO, I really do, but I really don't want to have too much money in these guys. I'm happy having a relatively small position and seeing what happens. So I mean, with NIO, on the monthly chart, we can see we're actually up 36.5%, so absolutely fantastic stuff. And we were actually up as much as 57.35%. And on the 6-month chart, it's been a similar story. I mean, it's just been up and up and up. So one thing that made me go ahead and just pick up a few more shares in this company, First of all, I bought really heavily into Workhorse and Diamond Peak in particular as of late. So I was just in the mood to add a little bit more to NIO. But then we had this news here, okay? Their August 2020 delivery update, which is juicy. They delivered 3,965 vehicles in August 2020. A new monthly record representing a 104% year-over-year increase. So I mean, this was just absolutely amazing. The best month we have ever seen for NIO sales wise. They've delivered 21,667 vehicles in 2020 in total so far, increasing by 109.9% year over year, and cumulative deliveries of the ES8 and ES6 reached over 53,000, very close to 54,000. And I mean, you should remember that their Q2 earnings were also absolutely fantastic. The most important thing to take away from those earnings that we cannot overlook was this: the quarterly vehicle margin reached 9.7%. That is compared to negative 24.1% in the second quarter of 2019 and negative 7.4% in the first quarter of 2020. We were hoping it would be positive, but this was massive. So we have better margins and we have the best sales we've ever had. It's a win-win by far. Now again, the RH Chinese company, they really shaky. They have their ups and downs, and I will be honest, I don't want too much exposure to these guys. They more than likely will always be the smallest EV position I have. And if there was one EV company I more than likely had the least faith in, it would be these guys, which is reflected by the fact I have a small position. With that being said, I do still really like them, and I think they have really, and I mean really, good growth prospects. And I think that their third quarterly earnings are set to be the best that we have ever seen. Now you might actually remember that when we posted those Q2 earnings, they dropped pretty much 10% on the day, okay? It was a typical buy the hype, sell the news. But it was only a matter of a couple of weeks later that they had gone back up over 50% pretty much. So I mean, do with NIO as you please. I do understand people who want to stay out of it. I also understand people who are very heavily involved in it. But yeah, I don't think you'll see me with a very big NIO position anytime soon. And the final company I bought was actually some more Virgin Galactic. So this was another 20 shares at about $17.50 a share. I now have a total of 80 shares and I'm actually in the red by about 5%. I made a video on these guys recently as well, okay, and I was somewhat outlining why I think now is a very good time to buy this company, as we have big catalysts coming out next month, and potentially the biggest catalyst that we could ever ask for the first quarter of next year: Richard Branson going to space. There's not a lot of excitement in these guys lately, you know, there's not a lot of hype, people aren't too excited, there's not much going on, and that's why I've decided to buy a little bit more. Now I was planning on buying at $15 a share, that's where I was going to really load up, but you can see we pretty much bounced once we hit 16 and we went on a nice run to the upside, up about 10%. So I bought 20 shares, you know, relatively small amount, nothing crazy, with the intention that if we go back down, I'll very happily pick up a whole lot more shares, and if we don't go back down, I'll pick up a few more shares. Okay, so this is a really cool article on Seeking Alpha. Virgin Galactic, valuing the company's commercial spaceflight business. And I mean, it's incredibly difficult to do this right now, in all honesty. So one of the first things this author says is, I believe current prices present a good opportunity for investors to begin accumulating shares, which I wholeheartedly agree with, and is exactly what I'm doing, just slowly but surely accumulating my position while we're relatively low. However, expect extreme volatility in this stock as the company ramps up towards commercialization. And I mean extreme volatility. I mean potentially Tesla level volatility. And why it's so difficult to actually value this company, okay, is because we don't really have much of a reference. There is no other publicly traded company who has commercialized spaceflight. Virgin Galactic haven't even done that yet, but they're the only play on it potentially happening. Do just remember though, the volatility here more than likely will be absolutely insane. Again, I still only have 80 shares in the company. In the grand scheme of things, not a big position. And there is also a part of me deep down that absolutely loves investing in speculative high risk companies. There is a part of me that loves the volatility. I mean, of course I love seeing my stocks boom up, but even last week when we saw Hyliion briefly dip 20%, we saw Tesla go down 30% in a matter of a few days, it excited me. But in the long term, we need to see those numbers go green. But guys, that is everything that I picked up this week. 5 companies, a decent bit of money put into the market this week for me, in fairness. A lot of that was dedicated to DPHC though. And of course it's Friday, and as I said, Fridays a lot of the time we see some pullback, so I might end up buying more today. If you want to know exactly when I buy stocks, whether it be today or any other day, click the first link in my description and sign up to my Patreon. You will get access to my private Discord group where you will get my buy and sell alerts and a whole lot more. But anyway guys, that is it for today's video. A very exciting week in the market in general, to be honest. I really enjoyed this week. I know there was a lot of anxiety, there was red, there was loads of swings, blah blah blah. As a long-term investor guys, that's just buying opportunities. I always say it, I don't really care too much what happens intraday, and I welcome dips because it means I get to accumulate at a cheaper price ultimately. But anyway, if you have watched until the end of of the video. You, my friend, are a true legend, and I really do appreciate you from the bottom of my heart. You are helping me out so much, so thank you for being here. If you did enjoy the video, could I please ask you to just gently tap that juicy like button? It really helps me out. Drop me a comment and subscribe if you're new around here. And if you do want to join the free part of the Discord, there's a couple of free chats. Click the second link in the description. We're getting very close to 1,000 juicy investors in that Discord now. But anyway, guys, I hope you all have a fantastic weekend. I hope your portfolios are all doing well. I will see you for the next video. Peace.